I've been investing throughout most of my 20s, but I've specifically been investing completely by myself using a DIY or do-it-yourself approach for 2 full years now. One of the best lessons that I've learned and lived myself throughout the last decade of my life is that knowledge builds confidence. So every year I've learned more about investing in the stock market, and more specifically about investing in the best way possible for someone that's my age, who's looking to invest for retirement multiple decades from now. And as I've learned more, I've made changes to my investing strategy and setup. And eventually I got to a point where I had enough knowledge and therefore enough confidence to invest fully on my own, which saves me a lot of money in fees, and on top of that will also likely lead to a better result over the long term, especially since I'm a passive long-term investor. By the way, what I mean when I say that I'm investing on my own is that I purchase my own investments and I manage my own investments without a financial advisor or a robo-advisor, which I actually used to use for a few years when I first started getting into investing on my own. Now, at this point in my investing journey, I actually have a maxed out TFSA, a maxed out FHSA, and maxed out RRSP, and I also opened up a taxable investing account for the very first time last year. So in this video, I'm going to talk in depth about how much money I've contributed to each of those different investment accounts, what I invest in inside of each of those accounts, and of course, my investment results, aka my investment returns. So let's jump right into it. The TFSA, or the tax-free savings account, is the very first investment account that I ever opened up and started investing inside of. Now, because it's the first investment account that I started using right at the beginning of my investing journey, it's also the one that's gone through some changes over time as I learned more and made changes to my investing strategy. I actually opened up my TFSA for the first time back when I was 21 years old still, fresh out of university, and at that time I didn't really know what I was doing at all. So I had an advisor at a big bank help me get set up, and what that led me to doing is investing $25 a month into mutual funds. Eventually, I started switching into investing on my own into index funds, but I was still at the big bank. I think I brought it up to about $250 a month at that time. Then eventually after that, I made an even bigger switch, the biggest switch at that time, to investing using a Robo-Advisor, and I was investing into passive ETFs. And I did that for a few years up until almost exactly 2 years ago, where I made the switch to becoming a fully DIY investor. Now, the reason that I'm giving you this background is because the growth inside of my TFSA has definitely been impacted by all of these changes, right? And the fact that I was literally investing in different things, like different investment products inside of my TFSA for the past 8 years. But for the past 2 years now, I've only held one investment option or investment product inside of my TFSA, and that's an ETF called XEQT. XEQT is a globally diversified all-in-one ETF, which basically means that it's made up of 5 different passive ETFs that all track different global markets. So that includes XIC, which tracks the Canadian market. There's also XEF, which tracks the international markets. Then there's ITOT and XTOT, which track the total US stock market, and XEC, which tracks emerging markets. So by investing in XEQT, I'm able to get global diversification in my investment portfolio by only actually having to purchase one single ETF, which keeps things really easy for me, and it's also relatively low cost since I'm still doing it myself. Basically, that means I'm not paying anyone else to invest for me, right? Now, the other thing I want to mention too is that in Canada, there actually isn't one individual ETF, so an ETF that's not an all-in-one ETF, that allows you to get that global diversification for a low fee at least. So for example, there is one that's listed in USD instead of Canadian dollars. It's called VT, but in that case, you'd either have to convert your currency or pay higher fees. So as of right now, I plan on sticking to only investing in XEQT inside of my TFSA, at least for the foreseeable future. Now, I want to really talk about the purpose of my TFSA. I'm personally viewing my TFSA as an account that I'm using to invest for retirement specifically. Now, what's great about the TFSA is that you could use it for any different purpose that you want to. In general, it's a super flexible, great tax-free investment account. And by the way, that's the tax advantage part, the fact that it has tax-free growth. And you can also pull your money out tax-free, but you do have to keep some rules in mind, of course. And it's exactly because the tax-free perk is so great that I want to be able to use this account to its full potential and leave my money in there to grow and take advantage of compound interest for as long as possible, which would be until retirement, and also technically beyond that too, because your money can keep growing even once you're retired. So I'm only ever contributing to my TFSA, I'm never taking from it, and I'm letting it grow for multiple decades. Now, at this point in my investing journey, my TFSA is actually maxed out. In case you didn't know, the TFSA as a tax-advantaged investment account has a contribution limit. How it works is that every year, more room gets added to your account. So there's your lifetime contribution room that grows every year based on your annual contribution room that gets added. So for you, if you haven't maxed out your lifetime contribution room yet, then your annual contribution room limit doesn't really matter to you. For me, I maxed out my TFSA for the first time 2 years ago. So in 2025 and in 2026, I could only add more money to my account once more contribution room was added on January 1st of each year. In 2025, my personal contribution limit was $76,500. And now, as of 2026, my personal contribution limit is $83,500. So this month, once that $7,000 of additional contribution room was added, I added that much money into my TFSA and I invested it in, of course, XEQT. Okay, so now if we open up my Wealthsimple app and go inside of my TFSA to see the results, you can actually see that my $83,500 that I've contributed has turned into $118,102.18. So very good growth there so far for the last few years that I've been investing. You can actually see my current gain inside of my portfolio is just over $35,000. So all of that is from my investments growing in value on top of my contributions. It shows that that's actually a 42.16% return all time. I can also click through the 1 day results, 1 week, 1 month, 3 months, year to date, and 1 year, so you can see how things have fluctuated over time. Again, though, as a long-term investor, all of this is just nice to know and nice to have for now, but really I care about the long-term results. Okay, so before I get into my FHSA results, I wanted to remind you that we're hosting a live kickoff call for everyone who joins our course, Simple Investing for Canadians, before January 19th. Simple Investing is for anyone who either hasn't started investing yet, or maybe you have started investing, but you don't really know if you're doing the right things for you specifically. And on the live kickoff call, we're going to be doing a full intro to the course, a live Q&A session, and also a goal setting session so that we know where you want to be when the course is done. You have until January 19th to sign up if you want to be included on that live kickoff call. So make sure you sign up before January 19th at the link on screen or in the description box down below, and we can't wait to see you then. Now, once my TFSA was maxed out for the first time back in 2024, I ended up opening up an FHSA or a first home savings account next. This account is the only account that I'm using that technically isn't for long-term investing, aka it's not for retirement, it's for purchasing your first home, which is literally in the name of the account. Now, the thing is that this investment account has really great tax advantages, and also if you don't end up using the money that you have in this account to purchase your first home, you can actually roll it into a different investment account called an RRSP. So for me, it made the most sense to open up next. The FHSA allows your money to grow tax-free, just like the TFSA does, and you can also use it to reduce your taxable income. Now, for example, let's say in 2025, you put $8,000 into your FHSA. That means that you can subtract $8,000 from your taxable income for 2025, potentially allowing you to pay less money in taxes. Now, keep in mind that that's a very simplified, quick, high-level overview, but we do have a full video breaking down this account in more detail if you're interested. Now, with all of that being said, I personally am planning on using my FHSA to invest for a future first home purchase. The thing is that I'm just not planning on buying a home, at least not one for me to live in, for at least another 10 years, or at least not in the short term. So because of that, I'm still able to treat this as a fairly long-term investment account, at least for the moment. So because of that, I decided to stick to investing in XEQT inside of my FHSA as well. Now, if you were planning on using the money inside of your FHSA to buy a home within, let's say, the next 2 to 3 years or so, you might make a different decision. Like you might not want to invest in 100% equities or stocks. But for me and my investment time horizon, it makes sense. Now, the other thing to mention is that the FHSA has a maximum lifetime contribution limit of $40,000 for everyone. And you get to that limit by gaining $8,000 of contribution room per year for every year after you open up your FHSA. Now, for me, I opened up my FHSA in 2024, so I gained $8,000 in 2024, $8,000 in 2025, and then I just gained another $8,000 for 2026 as of January 1st. Now, I've maxed out this investment account as well, including the new contribution room that was just added for 2026, which means that I've contributed $24,000 to this account myself. Okay, so now let's pull up my Wealthsimple app again and look at my FHSA specifically. So if we click inside of that account, you can see that my $24,000 that I've contributed has now turned into $29,061.41. So again, that's currently just over $5,000 of a return. So on top of the money that I've actually contributed and put into the account, that's 21.12% all time. Again, if I click through the different phases, the week, months, 3 months. Also, it looks like this right now because I just contributed my lump sum for this year, right? So that's why the graph looks pretty steep. 1 year, all time, you can see what my return has looked like. The third investment account that I opened up after my FHSA was an RRSP, or a registered retirement savings plan. Like it says in the title, this investment account is specifically meant for investing for retirement. So just like my TFSA, I'm using this account to invest for, you guessed it, retirement as well. Now, this account is also a tax-advantaged investment account, but it's not tax-free, it's tax-deferred. So what that means is that you can use the RRSP to reduce your taxable income now. So similarly to what I explained with the FHSA, if you contribute $8,000 to your RRSP in 2025, you can subtract $8,000 from your taxable income for 2025 and potentially pay less taxes now. But you will have to pay taxes on that money when you withdraw it from your RRSP once you hit retirement. Now, I'm really excited to talk about this account because I actually maxed out my RRSP for the very first time last year, so in 2025. Now, I was actually able to remax out my TFSA and FHSA in the very, very beginning of the year because Dennis and I paid ourselves out a $15,000 bonus. We're self-employed, by the way, in case you didn't know that. So after the first month of the year, I was able to prioritize my $2,000 a month investment contributions towards my RRSP afterwards for the rest of the year until I maxed it out. Now, on top of that, I actually maxed out my RRSP even earlier in the year than I originally thought I was going to be able to because I received my biggest tax refund ever in 2025. Now, to explain why that was, let's actually back up to 2024. 2024 was the first year that I started the year with a fully maxed out TFSA. So for the rest of 2024, I was focused on contributing to my FHSA and my RRSP. Now remember that you can use your contributions that you made to both of those accounts to reduce your taxable income come tax time. And in my case, I personally chose to use all of those contributions that I made to reduce my taxable income as much as possible as opposed to deferring it. And that resulted in me receiving a tax refund of over $12,500 in 2025. Then I took $10,000 of that $12,500 and contributed it to my RRSP as a lump sum. And of course, invested that money after I contributed it. And by the way, that actually ended up saving me 5 months of contributions to my RRSP, allowing me to max it out much earlier in the year. By the way, I should mention that your RRSP calculates contribution room in a very different way. It's based on a percentage of your income earned, so it's very personal to you. For me, my overall RRSP contribution room limit as of 2025 was $61,985. So that's how much I've contributed to my RRSP up until today. Now I'm going to continue to contribute to my RRSP later this year, specifically after March 2nd when the RRSP tax year resets again. And that's because I want my contributions to count towards 2026, not 2025, even though I technically did gain more contribution room as of January 1st, 2026. I've gained about, at least according to my calculations, $12,700 of additional contribution room this year, which will take me just over 6 months to remax out again. So that'll be March, April, May, June, July, and August of this year. Also, before we get to my return, I need to actually talk about what ETF I invest in inside of my RRSP because it's actually not XEQT. Instead, I invest in a different globally diversified passive ETF called VXC. Now again, this is still a globally diversified ETF, but in this case, it's actually called a global excluding Canada ETF, which means that there's no Canadian equities inside of it. Now, I made this decision because I wanted to decrease the amount of Canadian market exposure I had across my overall stock market investment portfolio, since XEQT is made up of about 25% Canadian equities, even though the Canadian market only makes up about 2 to 3% of the global stock market. Now, with that being said, it's totally fine to just stick to investing in XEQT. That's a totally fine option. I just personally decided to invest in VXC inside of my RRSP. Now, VXC is another all-in-one ETF. So it's an ETF made up of other ETFs, but in this case, it's made up specifically of about 65% the US market and 35% developed and emerging markets. Okay, so let's see the results on my Wealthsimple app. I'm going to scroll down to my RRSP and go inside of that account. Now again, in here you can see that the $61,985 that I've contributed to this account has turned into $79,056.65. So again, my return in this account is just over $17,000. I like how all of it's pretty even, just over that amount, and it's a 27.54% return all time. Again, I can click through so you can see the 1 week, the 1 month, 3 month, year to date, and 1 year return. Keep in mind, I haven't contributed to this account since about mid of last year, so there's no sharp uptick, but I'm going to continue to contribute later on this year. You can also see down below what your RRSP contributions were for the last tax year, which is nice inside of the app too. So again, after March 2nd this year is when I'm gonna get back to this account. Okay, we're almost done here, but I still have one more investment account to talk about. Now, last year, after I maxed out my RRSP, I of course still wanted to keep investing my money. Again, for the long term, we're talking about retirement here. So I opened up a taxable investment account. A taxable investment account, which is also called a non-registered investment account, is one that has no tax advantages or benefits at all, which is exactly why I've prioritized focusing on maxing out my tax-advantaged investment accounts first. But I am really glad that regular taxable investment accounts also exist, so I can keep investing and growing my money even more. Now, there are no contribution limits or rules when it comes to contributing to and using a taxable investment account, but keep in mind, you do need to pay taxes on the money that you make and earn off of your investments inside of this account, so make sure you keep that in mind. Now for me, I plan on using my taxable investment account first as one that I'm going to use for the long term, so for retirement, just like my TFSA and RRSP. I'm not touching the money in there. And also I'm only going to be contributing to it and investing money inside of it once my TFSA, FHSA, and RRSP are remaxed out every single year. By the way, I decided to invest in VXC inside of this investment account too. So I invest in XEQT inside of my TFSA and FHSA, and I invest in VXC inside of my RRSP and taxable account. At least that's my current setup. Now, last year I maxed out my RRSP in June, so I opened up my taxable account in July, and I started investing $2,000 a month into this account in July, August, September, October, November, and December. And in January 2026, this year, I also contributed another $2,000 to it. So that means that I've contributed a total of $14,000 to my taxable account. Okay, so again, let's pull up my Wealthsimple app and look at these results for my non-registered or my taxable investment account. Click inside of it. Again, the $14,000 that I've contributed up until this point is sitting at $14,905.63. That's just under $900 in a return so far, or about 6.35% all time. Again, keep in mind that this account that I've had the least amount of time, only for a few months now, I guess, just over half a year. So returns a little bit lower all time, but we'll see how that goes up and down over the long term too. So that's a wrap on my Wealthsimple Trade portfolio results after 2 full years. I'm really excited about the fact that I'm at the stage in my investing journey that I have maxed out tax-advantaged investment accounts. They're all full and maxed out, and I've been able to start opening up and using a taxable investment account too to keep my investing journey going. It was such a big milestone to hit last year, and I'm just really excited about it and ready to keep things pushing this year. Now, 2026 is also the year that I turned 30 years old, so that means we're wrapping up a decade of life, which is my 20s, and entering in an entirely new decade. So I feel like there'll be a lot of reflection coming on all things money and investing for me over this next year. So make sure you subscribe to see future updates in my investing journey. And also, please let me know how your investments did over the past year down in the comments below.